Hey everyone, welcome back to Corporate Decoder. Today, Fidelity Advisor Series, I just filed their semi-annual shareholder report, and I am focusing on the juicy financial tidbits that might matter to you. Quick note, this is not financial advice, just my take on public filings for educational purposes. We are going to dig into what these numbers really mean for some of the Fidelity funds we track. Let's kick things off with the Fidelity Real Estate High Income Fund. For the 6 months ending May 31, 2026, the fund size was a hefty $717 million. That is a lot of money invested in real estate related assets. They hold 366 different investments. Their portfolio turnover rate was 26%, which means they are not aggressively buying and selling. This suggests a more long-term approach to their investments. When we look at how they are diversifying their investments by quality, we see over half their assets, 56.8%, are listed as not rated. This is a pretty significant chunk and suggests they are taking on more risk in pursuit of higher yields, which aligns with a high-income fund. Only 6.3% are AAA rated, and then smaller percentages are AA, A, and BBB. The asset allocation gives us a clearer picture of where the money is going. A massive 87.2% is in CMOs and other mortgage-related securities. This means they are heavily invested in bonds tied to mortgages. Asset-backed securities make up 5.7% and corporate bonds are at 2.9%. Short-term investments and net other assets or liabilities is at 3.7%. The vast majority of their holdings are directly tied to real estate debt. Looking at the top holdings, the fund is really concentrated in commercial mortgage trusts. A BX Commercial Mortgage 2020 Trust is their largest holding at 2.6%. BX 2019 Trust follows at 2%, and Hilton USA Trust is at 1.7%. The top 10 holdings add up to 14.9% of the fund's net assets. This shows a decent level of diversification within their mortgage-backed securities holdings. Next up, let's check on the Fidelity Advisor Value Strategies Fund. This fund is much larger, standing at $2.2 billion. They have 176 holdings and a portfolio turnover of 121%. That high turnover suggests they are actively trading and trying to capture value in the market. In terms of market sectors, industrials make up the largest portion at 22.9%, followed by financials at 16.3% and information technology at 13.7%. Healthcare is at 10.7% and consumer discretionary is at 9.3%. They are spread across various sectors, but have a notable tilt towards industrials and financials. For top holdings, Western Digital Corp is number 1 at 3.7%. SanDisk Corp D is second at 2.1%, and On Semiconductor Corp is third at 1.9%. The top 10 holdings sum up to 14.9%, indicating a slightly more concentrated portfolio than the real estate fund. Now let's talk costs. For a hypothetical $10,000 investment in the Fidelity Advisor Value Strategies Fund, the costs were $42, which is 0.75% of the investment. For the Class M shares though, the costs were much higher at $72, or 1.30%. This highlights the significant cost difference between share classes, something investors always need to watch. Let's move on to the Fidelity Advisor Stock Selector Mid Cap Fund. This fund is also substantial at $2.5 billion with 206 holdings. The portfolio turnover here is 79%, showing active management. Sector-wise, industrials lead again at 26.1%, followed by information technology at 15.9% and financials at 14.3%. Consumer discretionary is 10.2%. This fund also seems to favor areas with potential for growth and cyclical upside. Their top holding is Macom Technology Solutions Holdings Inc. at 2.1%, followed by XPO Inc. at 2% and Twilio Inc. Class A at 1.8%. The top 10 holdings account for 16% of the fund's assets, showing a moderate level of concentration. Costs here for the Fidelity Stock Selector Mid-Cap Fund were $38 or 0.71%. Class Z shares were cheaper at $35 or 0.64%. Again, we see that cost variation across share classes. In terms of actual investments, let's look at the Fidelity Advisor Series Growth Opportunities Fund. This fund is enormous, over $35 billion in size, with 212 holdings and a portfolio turnover of 80%. This fund is actively managed as indicated by the high turnover. The sector allocation is heavily tilted towards information technology at 51.9%. Communication services is the next largest at 18.1%, and consumer discretionary is at 10.6%. This fund is clearly focused on growth sectors, especially tech. Holdings here are dominated by tech giants. Nvidia Corp is their top pick at a massive 13.6%, Microsoft Corp follows at 7.3%, and Amazon.com Inc. is at 5.9%. These top holdings make up over 54% of the fund's assets, showing extreme concentration in a few dominant tech companies. Scroll cost of a $10,000 investment to spectator for the Fidelity Advisor Series Growth Opportunities Fund. The cost for a $10,000 hypothetical investment was $0 or 0.00%. This is notable and likely due to specific share class structures or fee waivers. Now let's look at the Fidelity Advisor Series Equity Growth Fund. It is a large fund at $1.5 billion with 157 holdings and a portfolio turnover of 59%. This is a solid mid-range turnover, suggesting active selection without being overly aggressive. Information technology leads the pack here too at 48.3%, followed by communication services at 11.4%, and industrials at 10.4%. Consumer discretionary is close behind at 10.3%. This fund also has a strong focus on tech and growth sectors. Their top holdings are Nvidia Corp at 13.5%, Microsoft Corp at 7.1%, and Alphabet in Class A also at 7.1%. Similar to the Growth Opportunities Fund, there is significant concentration in a few key tech names. These top holdings contribute over 54% of the fund's assets. When we look at the financials here, specifically the statement of operations for the 6 months ended May 31, 2026, notice the total income of $4 million. But then expenses are much higher at over $14 million. This results in a net investment loss of over $11 million for the period. Despite the fund size of over $13 billion, the expenses are quite significant, especially the management fee at over $9 million. The statement of changes in net assets shows a significant increase in net assets from operations over $200 million. This is driven by the net realized gain of $157 million and the change in net unrealized appreciation of $189 million. The fund is clearly benefiting from market gains. Overall, these filings show Fidelity's funds are heavily invested in technology and growth areas with significant concentration in top holdings. The costs can vary dramatically between share classes. The financial health for many of these funds looks strong due to market performance, but the expense ratios on some classes are a real factor to consider. The Fidelity Advisor Equity Growth Fund, for instance, shows very high percentage gains from investments, but also high expenses. Be sure to check the specific share class costs, as they can make a big difference over time. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. The tools I use for this research are linked in the description.